Hello and welcome to another episode of the Investor Financing Podcast. And today we're going to do another series of the Lender Showcase. We have Dan Boehner here from Bank of Franklin County. And I like bringing bankers from all over the nation to talk about the differences between what credit union might be versus a community bank. A lot of these community banks are more relationship driven. So it's good to understand that there's the big national banks where you might go in and try to get a loan and you're kind of a dime a dozen versus more of a community bank or a regional bank where they actually, appreciate and still have the kind of relationship banking that we might be used to in the olden days. So without further ado, Dan, welcome to the show. Why don't we first dive in with a little bit of your lending background, how you got started, what got you interested in the industry?
Sure. Well, first off, thanks again for having me on. I appreciate that and the opportunity to come on and share some things about myself and the bank. As far as getting started, I when I graduated college, I went to Drury University down in Springfield, Missouri. Played baseball down there. Was a pitcher for the team, and stayed on and got my master's. Not because I really wanted the master's, but because I didn't know what I wanted to do yet. So when I finished up there, banking wasn't really on my radar, just to be completely honest. And I, shot my resume out to different, companies and organizations, and took a job with what I would call a large community bank and what was then Reliance Bank, on the retail side of things. Worked with them for a little bit, and decided I didn't want to be on the retail side of banking. From there, I did have some interest in lending. As I had been in banking for a handful of months, that was a side that intrigued me. So I found a credit analyst job at a very small community bank that was kind of in rural Missouri, and cut my teeth there and learned the underwriting process, and ended up managing their credit department and a couple other analysts there. And after about 4 years, moved into a larger bank, Central Bank, and as a senior analyst, and then was eventually promoted into a lender role there. And while I was going through to come back to your original question, as far as getting into lending, as I was an analyst, I realized I wanted to get in front of customers and borrowers and be, face to face and having that interaction with them. It was a good mix of being at a desk and also being out in the community and helping people. So it was early on as an analyst. I realized I didn't want to be in the credit side forever, and lending was something that interested me.
So the Bank of Franklin County, you're the VP of commercial lending there. Can you tell me a little bit about like what products you lend on? You do SBA, is that SBA 7A and 504 or just SBA 7A? What about the other interests we have, our viewers and listeners have is, what other asset types do you lend on? Multifamily? Do you do construction, your lending footprint, so forth?
Sure. No, we are an SBA preferred lender. There's quite a few banks in the area that are, but we do have 7A and 504 loans approved frequently. We have a lender named Dennis Vitt in our office who handles most of those types of requests. We've got a group of 6 lenders with Bank of Franklin County, and if we get an SBA deal, we usually send it over to Dennis to handle. He's got good relationships and various programs with that. As far as myself, I typically specialize in commercial real estate. That's kind of my niche that I've found that I enjoy doing, and got most of my contacts are in that industry or in that field, and whether it be retail, office, multifamily, you name it. That's kind of what I've grown with. Owner occupied is definitely a hot button for Bank of Franklin County. Having owner occupied commercial real estate is is something that we really look for. They've got pride and ownership in that building, and they're operating out of there. There's lots of opportunity there.
So do you mostly lend in Franklin County or throughout the state, or what's your footprint?
As far as footprint goes, Bank of Franklin County has branches mainly in Franklin County in the Washington area. My branch is in O'Fallon, Missouri, and not too far from where I live in St. Charles, so just about 10 minutes away. I'm the only branch that's outside of Franklin County. We lend in the St. Louis metropolitan area, and then some surrounding counties. We'll go into Illinois a little bit, not a ton of Illinois deals, but we will, and we can. As far as footprint, we're pretty localized.
What about construction? Will you guys entertain construction loans?
We will, and actually, I some of the first ones that I brought onto the bank were home residential, home builders that we've done. So
Okay, great. And what about a lot of our listeners, they invest in multifamily. A lot of them have large portfolios of single family rental properties. Will your bank entertain like portfolio loans on single families that are rentals?
we will. Not it's not something that we're actively looking at, but it is something that we will lend on. And I have a borrower myself who has a large portfolio, and we finance quite a few for him. So yes, we'll entertain those deals.
Do you ever lend on like when like a gentleman like your client you have now, if they're actually acquiring the properties to fix up, and then will you refinance them into long-term debt? Is that something you've done too, or?
That's getting a little more outside of our box as far as purchasing and rehabbing and flipping homes. That's not to say we won't do it, but that's more outside of the box for us.
Sure. And what kind of threshold on like a multifamily deal? Are you guys very conservative where 65-70% leverage, or do you guys do 80% leverage if the deal is qualified and the borrower?
Sure, and you hit it right there. It's like a typical lender answer. Yeah, if the deal makes sense, we'll do it. But yeah, 80% still something that we'd entertain and look at. I'd say the majority of our deals will probably go up to that 75 to 80% range.
And where do you think Bank of Franklin County's competitive advantage might be compared to other, lending institutions and banks and so forth? Why would people want to come there and to work with you guys, like personal service, those kind of things?
Yeah, good question. Moving from Central Bank, which was at the time when I was there, was 2 billion, and they've since merged or consolidated them, all of their charters, and now they're over 20 billion in asset size, where Bank of Franklin County is now I'm at about 325 million asset size. I can say that there's, every bank tries to promote that relationship, and, you've got that small field, but Bank of Franklin County truly is that. We're such a smaller operation than something like that we can give you the personal touch. I give my cell phone out to everybody I meet, say, look, you can call, text, email, whatever, and any time of day, really. I don't mind. I'll get back to you as soon as I can. Every bank offers very similar products, whether it be rate, term, the structure of the deal. When it all comes out in the wash, it usually comes very close in some sort of range. So yeah, I do pride myself on those relationships and providing that, that customer service that goes the extra mile, and making sure I'm available. I think just being available and being able to get answers for borrowers and clients is the best thing you can do.
And what's your bank's outlook right now with like inflation being where it is, all the supply chain issues? Are you guys scaling back right now? Or are you still bullish and pretty aggressive on your lending?
We're in a growth mode. Bank of Franklin County is in a definite growth mode. It's something we have. Our loan committee meetings are on Tuesday, and it was just kind of reiterated, like, look, we need to grow. We're looking for loans. So yeah, we're bullish on trying to get those in, especially before, and that's part of the, we'll call it a sales pitch right now, is saying, look, we could still lock these rates in at a fairly low rate for an extended period of time. Whereas if you hold off till the end of the year, you might be looking at something that's, half point higher to a full point higher for that matter. So.
And yeah, I think a lot of people are thinking that rates are going to be moving. So if you can lock in right now, it's advantageous.
Mhm.
And as far as like loan limits, are you guys like an $8 million cap because you're a smaller bank, or what are your large thresholds for
Yeah,
loans?
you nailed it right there with your 8 million guess. Our caps are right around 8 million. We get 1 to 5 million, I'd say, is a pretty good sweet spot for us. Anything higher we'll entertain up to that, and even if it's over 8 million, obviously banks have options to do deals larger than their, legal capacity, whether it be participation or, other routes, avenues. So, but 8 million is about where we're at. And then I'd call the 1 to 5 as a sweet spot.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
And what advice do you have for a potential borrower? Maybe they're not in your local market, but just general advice. With your kind of analyst background, you're probably very analytical and
Yeah, that would, yeah.
you're good at structuring deals and so forth. But can you give some advice on how a borrower or sponsor could should set up their, initial conversation with the loan officer? What tips and tricks, help the loan approval process that you've seen that just make a deal that got streamlined through and it was easy versus these deals that are just headache after headache?
The biggest thing I see, and it takes the most time for the borrower, frankly, is gathering, whether it be financials, a personal statement, having, if it's someone like, with the single families, going back to that, making sure you have a detailed rent roll, making sure you have debt schedules. And if you put all of that together and compile it, then that way you can just kind of provide that and go to different bankers. You can provide that whole package up front, and getting the information up front can streamline the whole thing. I've had, I have multiple people that call and they want to ask questions about rate structure, and I can only provide those in rough estimates without seeing the actual details. I mean, banks traditionally are risk-based priced on, not every customer is getting the same rate, because you've got to mitigate, you've got to price it for the risk on the deal. So just being very upfront with your lender is extremely helpful, and being open. Just because you think something might not look great on paper doesn't necessarily mean that the lender's going to, hyper focus on that point. There are ways to mitigate risk, and that's what I would say, is just have that package ready to go and make sure you provide that all up front.
Give us an example of a kind of a crazy, maybe not like a risky loan, but just some kind of weird type of loan you did, or something that you remember it goes down in history where you're like, wow, this was an interesting deal, and you might have overcome some challenges on it.
So I'm going to give you one that I just had a couple weeks ago. We had to pass on it, so it's not one that went through, and then I can circle back to one that we did do. I had a jade quarry, an out of town jade quarry. There's only two in the entire country, and it's a very complex deal that was, something I had never seen before, and the structure of the deal it was like I said, fairly complex. It's just something that was very interesting to me to read about it and look into. But yeah, that was the most interesting that I've ever seen. It just happened to be a few weeks back. And then I've underwritten a couple deals on airplanes. Those are always interesting. Very niche as far as the product that the borrower's buying, and those are deals that you look at when you're done. You kind of scratch your head and think, man, that's how are we really okay? It's just so those are two examples I'd give for off kind of out of the circle, out of the box deals.
Because you underwrite not just commercial real estate type deals, but business loans as well.
I do, yeah, and I like I said earlier, my niche is in the real estate, but I'll C&I is very much a part of what I do, and yeah, so I can do either one.
So let me ask you a question on like owner user properties. Why would a borrower maybe not want to do an SBA and just go conventional? Fees, or can you guys get as aggressive sometimes on leverage and things like an SBA loan?
Yeah, so and with the 504 program, there are definite advantages. You lock in the SBA portion long term on a rate. You are not bringing in as much cash, which is usually the most attractive part of an SBA deal, is the 10% down, not the 20% down. That's usually what draws borrowers to it the most. But downside of the SBA 504 program, or even the 7A for that matter, is usually time. And it takes time to go through first the bank approval and then the SBA approval. If there's a construction portion of it, it's held completely by the bank until, or just stabilized for that matter. The bank has to hold that and take that risk on for an extended period of time. And if anything happens, life-changing events, sometimes that SBA portion doesn't come through, and then there's issues. So that's an issue. There's also a different amount of fees involved with the SBA. You're going to have increased fees with that. And then the prepayment penalties on an SBA note are extremely high in the early years. If you get yourself into a point where you have an opportunity to refinance for some reason at a better rate terms, it's tough to get out of those because they've got investors on the back end that expect a return that they've been promised, and if you want to get out, it's tough. So there's pros and cons to each. Not everyone fits one bubble, but that's where I would sit on that.
Yeah, that makes sense. Well, I really appreciate your time, and I love bringing guests on here from all over and to discuss, different banks and lending programs. And I always encourage people when they call me and they're looking, for financing, the local banks are a really good place to start, as opposed to these national lenders, because they, I have people that are buying in areas all over the nation, and it's really like, it's really localized that I find you have the most success, especially in like smaller markets that, I helped a lady purchase a property in Kentucky, and I was like amazed that this small bank, it was like a mixed use property she bought. She got 80% financing. I couldn't believe the rate and fees were like unbelievable. I would have never guessed she would have qualified. Plus, it wasn't a huge deal. For most commercial lenders, national lenders, they want to make, like at minimum, like a $2 or $3 million loan, these big national lenders. So, that's where you got to start looking at local and community banks, because, they can be more flexible on what they lend on and so forth. And if you have a owner that is, or a potential borrower, a lot of banks though don't like when the actual sponsor or borrower lives out of the area. Are you guys okay as long as the property's in your footprint and they have a banking relationship?
Yeah, it gives us some more comfort if one of the others in town, if the property's out of state but the borrower's in town, or the guarantor, I should say, is in town. That it's more comfort. It's tougher when both are out of state or out of town. So yeah, we're able to work around that.
All right. Well, Thank you so much, Dan, for joining us on our show. I love bringing value to everybody that's going to watch this and listen to this in the future. And I look forward to doing some deals with you in the future as well. And really appreciate your time.
Yeah, same here. Thanks for having me, Beau. I appreciate it. An opportunity to talk about Bank of Franklin County and myself. So thanks again.
All right. Thanks, everyone.